Hello and welcome to BQ Prime. A very good morning to all the viewers. And as promised, we are back with a conversation on Infosys as well as TCS, taking into consideration Infosys TCS, Infosys ATR, I beg your pardon, which is down nearly 6%. Clearly, the results have been weak, and that could have a negative opening as well in terms of not only the stocks but overall markets as well. And clearly, the underlying theme that we're picking up is that the blockbuster deal making that we've seen is really not showing materially in terms of the top line. Now, what is causing it and what's the transition ahead? Joining us on the show to discuss more in terms of stock price reaction, as well as Omkar Tanksale, Senior Research Analyst at Axis Securities. Omkar, good morning and welcome to the show.
Thank you so much. Good morning, ma'am.
Omkar, before we get into any qualitative aspect of the numbers from the guidance which has been lowered to what's the discretionary spending looking like or what's in store, the key that everyone wants to hear about right now is with the ADR, which is down 6% in terms of Infosys. What is the kind of opening that you are expecting with both these counters and the rub-off effect on the other IT majors?
I mean, definitely there will be a Dow opening or opening in a red is likely to be held because they have slashed the guidance from 1 to 3.5 to 2.5% for FY24, which looks to be very skeptical. The management has also guided for this spend cuts and delay in the decision making, which likely to impact on the revenue growth momentum going ahead. So recovery will not be as soon as we were expecting in H2 FY24. It might get delayed. Maybe nobody knows how the uncertainty is going around. So that atmosphere for overall IT sector maybe causing a negative vibes. The two things that should be favorable to the one should be looking at from the long term perspectives are whether it is on the margins because supply side easing out, everybody is gaining on the margin front, whether it is TCS, HCLTech or the Infosys and the deals that they have won. Every company is winning the deals. The order book looks to be very attractive at the current moment of. So whenever there will be a recovery, there will be a quicker recovery. But as of now, one should be looking on a negative perspective. Yes.
Right. So, Omkar, are you saying that today a gap down opening is warranted? And if yes, how much do you think we will see it lower? Do you think Infosys with a 5 to 10% downtake, HCL with a similar downtake, is that a possibility according to you?
Infosys have definitely seen a larger gap down opening with a 4 to 5% of the decline on the stock price. However, it's the fundamental target price that we are looking at around 300 because of the robust the deals that they have won, and also the Salil Parekh have also guided that. Exit of FY24 might be surprise you with the revolution in the economic cycle, and one can expect a quicker recovery. So we are not pessimistic. It's more of a sentimental trading for the today's trend, but I believe going ahead they will be settling down. Secondly, on HCLTech, I am not that worried about HCLTech. It's been promising. It's has also slashed the guidance by around 30 basis points to for 5%. For 6%, and services revenue guidance have come down to 4.5 to 5.5% in a range. So it's already been executing well. The year-end business is back on the track. It's have demonstrated 5% Q-on-Q growth in year-end. So overall market pack HCLTech is doing good as compared to its TCS and Infosys. So it's I'm not worried about the major price fluctuation between HCL and Tech. Yes.
Right. So overall, the key point over here, Omkar, is that the headcount reduction and the fact that the near-term discretionary is a problem. And this is despite the large deal wins, the guidance is lower, revenues are missing. Do you think it could continue to be a concern right now? And are you expecting that to pick up probably in the first quarter of calendar year 24 as that's the new start of the year, specifically from a US market perspective?
Yes, it quite possible because everybody's uncertain about the current macroeconomic sentiments. So there might be, they all the management is saying we have the month-on-month visibility. So it will be difficult for us to tell when there will be a recovery and when there is a leak buckets are going to patching up and new deals are going to ramp up. So, but currently they are, they are not able to ramping up the deals that they have bought, but still the deal pipeline remain robust. Book to bill ratio is coming down. We are expecting the exit Q4 FY24 might show some recovery, and FY25 may have the growth rate back on the track with newer technologies like machine learning, generative AI, etc. So it might be a positive, but yes, in near-term challenges still persist. What happened that in the COVID during the COVID times, the company have overhired. Now the people have started, letting down, and they are going slow on hiring as the demand scenario is uncertain. But the attrition rate, if you have seen, they have reduced it by 200 to 70 basis point all among all the three companies. So it's not that it's being they are going slow on hiring or something like that. It's because they are just settling down, getting the utilization back at 85 to 86, 90%. So that's all with the cost optimization thing that also help them to gain on the margin front as well. So that is the overall strategy in the current scenario. As the growth indicators, they will again start hiring on a larger scale.
Right. So with this, so my takeaway, Omkar, is that yes, there is near-term pressure, but from a longer-term perspective, there could be some green shoots that could emerge. Am I picking it up correctly?
Yes, definitely. I mean, see, there are 3 to 4 reasons that one should be looking at an Indian IT services company. I mean, the deal pipelines looks to be very, very strong. All the companies are closing all-time high deal wins with the newer technology. Secondly, the Europe standing is very, very strong. When there will be a recovery, it will be a quicker one. They are started gaining on the margin side. So supply side concerns are easing up. The only concern is demand. They are just delaying the process. They are just avoiding the discretionary spending for the time being. But if there is a permanent loss, there might be, they would not get any deal by deal win momentum. So, but it's still continuing and on a larger scale. And the last point is there is no cancellation of the project as of now from the large top client account from any of our large cap or mid cap IT companies. So that is also a positive sign. So one cannot expect, I mean, the overall threat to a business, but it will definitely a recovery. There is a time of uncertainties, but it will get eliminated within 3 to 6 months of the time, and the growth trajectory will back on the track. So on a longer term perspective, if we can see FY25, FY26, there will be a so strong business momentum or revenue growth momentum going ahead. Yes.
Right. So, Omkar, overall, uh, any corrections in terms of IT stocks from a valuation perspective and stock price perspective, do you think that should be used as an opportunity to enter IT as a sector? Number one. And number two to that is someone who's, excuse me, already holding IT stocks. What would you advise them to do?
If the investor is a long-term investor, he definitely keep invested because they are also paying good amount of dividend. The TCS is coming with a buyback, so they have the basis of transferring 80% of the cash flows to the investor. So it's not a real loss in terms of value. The holding cost is still going to be recovered if the stock is being holding for a 6 months to 12 months period with the interim dividend, with the buyback, and all the other facilities going to be unveiled for you. So that is not a pressure on the investors. And also if the investor is looking to enter into the sectors, this might be a correct time. We don't know how is being Q3 because it's being a seasonally weaker quarter. There is a lot of furlough, so it might get impacted. Stock may go down, but if you can gather the stocks in a longer run perspective in a staggered manner, it will be a safer bet and balancing the risk out.
Right. So I think that's an interesting view to pick up as well. Thank you, Omkar, so much for joining us on the show and sharing the views. But clearly, the pressure is expected to continue in terms of IT. We're just probably 2 or 3 minutes away from seeing rates settle down as well in terms of Infosys, TCS, as well as an HCLTech. But an interesting day to watch the IT majors. Thank you. And that's all that we have on this session. Thanks for watching. And lots more lined up on the other side. Please stay tuned to BQ Prime.